In this video, I'm going to show you how you can get safe dividends. And so by safe, I mean dividends that are coming from a stock which is considered pretty much ultra safe. So there are two stocks in the entire world that have a rating of AAA, which is the highest possible rating. And those stocks are Microsoft and Johnson & Johnson. So for the purposes of this video, we're going to use Johnson & Johnson because it pays a much higher dividend currently than Microsoft stock. So Johnson & Johnson currently is paying an annual dividend of $4.52 a year. So if you bought one share of Johnson & Johnson, you would be getting $1.13 for that share 4 times a year. So once every quarter. So here you can see I'm on the NASDAQ website, and you can see the payment dates. So you have, for example, you would have gotten paid, or you will get paid on September 6, 2022 if you own the stock before the EX date, which in this case is 8/22. Likewise, you would have been paid on June 7th if you own the stock before this date here. So basically, you buy the stock, you hold it, and at some point, you're going to own it before an EX date, and then you'll get your dividend on your payment date. Also, these dividends are taxed at the qualified dividend tax rate, which is beneficial. It's a little bit better than just regular income tax. So there are some lower rates when it comes to qualified dividends. Okay, so Johnson & Johnson, again, considered the safest. So let's see, if you wanted to make $100 a month, that would be $1,200 a year. So basically, you just go to Google, you type in 1,200, and you divide it by 452, because that's the annual dividend. And so I got 265.48 shares. Let's just call it 266, and let's look up the price of Johnson & Johnson stock. So right now it's 172 even. So you would do 172 times 266. So if you had $45,752 invested in Johnson & Johnson, you would get on average $100 a month. And again, these are safe dividends. So that's a lot of money. It's a lot of money. It's a lot of money to have in one instrument. But again, we're looking at a company that is rated AAA. There's only 2 companies in the entire world that have a rating that is that high. So just an interesting experiment to show you how you can get safe dividends. Let's say you wanted to make $1,000 a month though on average. Let's change it up. So if you wanted to make $1,000 a month, that would be $12,000 a year. So divide that by the annual dividend. And that's how many shares you would need. 2,654.86725664 shares. So we could do, let's just say 2655 times 172. And in this case, you would need $456,660 worth of Johnson & Johnson. So for less than $500,000, you can get $1,000 a month on average from a company like Johnson & Johnson, which again is considered a safe dividend. Now, the problem with this situation is that you want more income, right? You always want more. You want more for your money. And the problem lies in when you try to raise the dividend yield, what happens is you start exploring other stocks or other funds that might not be as stable as Johnson & Johnson. So it's a trade-off, and it's a decision that only you can make because it's your money. And as they say, no one cares more about your money than you do, right? You're the person who cares the most about your money. And I think it's really important to remember that. So that's one way to get safe dividends from a stock. There's another way to do it. Let's look at, let me show you a different way to do it. So another way is to look at something like VYM. So VYM is a stock fund issued by Vanguard. And let's see if we can find the yield. I'm going to go here to their website, see if it gives me their yield. So we can do an estimate. So the problem with VYM is that it's not a predictable dividend. You don't know how much you're getting every month. Actually, I'm just going to go to Yahoo, and that will probably give me the yield a little bit quicker. Let me just find that, and I'll show you. And we'll do the same calculation with VYM just to see, how much we would need. So VYM, I believe, is currently paying a yield that is a little bit higher than Johnson & Johnson. So 3.04%. So let's just call it 3%. call it 3%. So if you wanted to make, $1,000 a month, so $12,000 a year at 3%, you would basically just do 12,000 divided by 3%, and you would need $400,000 invested in VYM. So if you took 400 grand and you put it into VYM, which is an index fund, so I'm pretty sure it can't go bankrupt, right? It holds a whole basket of stocks. You would get roughly $1,000 a month. So those are two relatively safe choices that you can use to collect dividend income. And I always think it's better to diversify, put a little bit here, put a little bit there. And you just have to be careful, because if you diversify too much, you'll end up putting money in places where you probably shouldn't be putting your money. So those are some ideas for dividend income. You could do the same computation with Microsoft. The problem with Microsoft is its current dividend income is 0.89%. Let's do it just for fun. I mean, that's going to be a ton of money in Microsoft. So 0.089, that's going to be insane. Yeah, so you're going to need $1,348,314.61 invested in Microsoft to get $1,000 a month on average. Pretty ridiculous, and Microsoft stock has had a really big run up. Look at the chart here. I mean, look at that. So, it might settle down. I own Microsoft back when it was in the 40s, and I was buying it with a credit card from some broker that no longer exists. So, it's really hard to look at a stock like this now and say, wow, shoulda, coulda. But all we have is the now, and all we have is the present. So I think if you're looking for dividend income now, I think two better choices would be the Johnson & Johnson choice or the VYM choice. Both of those choices, I think, could lead you to good results. If you want to take a risky approach, you could do something like SDIV. So SDIV is paying, let's just call it 13%. So how much would you need in SDIV to create that same amount of income? So 13% would be 0.13. So you would need $92,307 to get roughly $1,000 a month on average from SDIV. The problem with SDIV is that the stock doesn't really, or the ETF doesn't really perform well. Let's look at a chart here, just using stock charts. It's all free. And you can see it's pretty much, collapsed here. So yeah, I mean, it's pretty much on par with the market, but I mean, look at this. That's pretty low. And if you look further back, you see it was higher at some point. So it doesn't really do so well compared to other funds. So that's a trade-off you have to make. So if you're watching videos on the internet, trying to figure out, what should I buy to get dividend income? My advice would be to diversify. And hopefully this video has given you some ideas to play with. Good luck.